Will the Fed actually cut interest rates in December, or are markets getting ahead of themselves? Today, we're diving into what the experts are saying and what it means for your money. Here's the deal. Just a day ago, traders were almost certain, 90% sure in fact, that the Federal Reserve would lower rates this December. But then, Fed Chair Jerome Powell made some pretty careful comments, and suddenly those odds dropped like a rock to just 67%. So what happened? Let's break it down. Powell didn't explicitly say, no rate cut, but the way he talked about December got people second-guessing. He mentioned that the Fed still needs to see more evidence that inflation is cooling off before making any moves. And that's a big deal, because the Fed's number one job right now is fighting inflation, making sure prices don't spiral out of control. But here's where it gets interesting. The markets tend to hang on every single word the Fed chair says. One slightly cautious comment, and boom, traders start rethinking their bets. That's why we saw such a sharp shift in expectations in just 24 hours. Now, why do rate cuts even matter? Lower interest rates can mean cheaper loans, more business investment, and sometimes a boost for the stock market, but they can also risk letting inflation heat back up. It's a tricky balance, and that's what no one tells you about risk. When the Fed signals uncertainty, it sends a ripple effect across the entire financial system. Mortgage rates, credit cards, even the value of the dollar can shift in response. Let's zoom out for a second. Historically, the Fed has only cut rates when it's confident inflation is under control or if economic growth is at risk. In 2019, for example, we saw a series of rate cuts as trade tensions and a global slowdown threatened the US economy. But right now, inflation is still above the Fed's target, and the job market, while slowing, hasn't crashed. So, could the Fed still cut in December? Absolutely. It's not off the table, but the message from Powell is clear. They're going to wait for more data. That means every jobs report, every inflation reading between now and then could tilt the odds. And here's something most people overlook. When traders adjust their bets, it doesn't just reflect what they think the Fed will do. It also shapes how banks, companies, and even regular folks like us plan for the months ahead. It's a feedback loop, and right now, everyone's watching and waiting. The bottom line? The chances of a December rate cut just got a reality check. As an investor, it's a reminder to stay nimble, watch the data, and not get too comfortable with any single prediction. So, what do you think? Will the Fed pull the trigger in December, or will they keep rates steady into next year? Let me know in the comments, and don't forget to like and subscribe if you want more clear, no-nonsense takes on the markets. Because as we just saw, one sentence from the Fed can change everything, and you'll want to be ready when it does.